Good evening. Thanks for joining us on India Business Hour. I'm Shireen Bhan. The headlines we're tracking for you this hour. The Tatas take the next step in consolidating their aviation businesses. Vistara to merge with Air India to create India's largest international airline. Singapore Airlines to get 25% in the merged entity for a combination of its 49% in Vistara and $250 million in cash. Will invest up to $615 million in additional funds after the merger as required. Trouble mounts for the Jalan Kalrock consortium that won the bid to revive Jet Airways. Lenders tell the NCLT the consortium has failed to meet any conditions precedent required for the takeover, also termed the consortium's request seeking ownership transfer as misleading. Separately, the Jet Airways Cabin Crew Association moves the NCLT, seeking liquidation of the airline's assets. Outgoing Revenue Secretary Tarun Bajaj is confident that the government will meet the 6.4% fiscal deficit target this year, says the capital gains tax regime needs to be simplified, but he's disappointed with the response from what he calls conflicting views and interests. It's time to completely rethink and reinvent India's personal tax regime, says Tarun Bajaj, adds that India needs a simpler tax structure where the correlation between tax and income is more balanced, but refuses to indicate whether any changes will be forthcoming in the coming financial year. The government is likely to estimate fertilizer subsidy for FY24 at 1.5 lakh crore rupees or lower. Government sources say the worst could be over in terms of higher pricing. The subsidy estimate for FY23 is seen more than 2 lakh crore rupees. Chinese company Alibaba will sell Zomato shares worth $200 million via block deals tomorrow. The sale will happen at a 5% discount to Zomato's current market price. The sale will bring Alibaba's stake in Zomato down to 10%. Heavy police presence on the streets of Beijing and Shanghai as China attempts to quell the protests against COVID restrictions, announces new measures to vaccinate the elderly, promises to remove lockdowns promptly as pressure to reopen the economy continues to grow. Telecom companies dial the government asking over-the-top players and apps to pay a usage charge, argue that entity creating the infrastructure is entitled to claim charges from those using it for commercial gains. Elon Musk feuds with Apple, accuses the tech giant of trying to censor the platform by pausing advertising, also claims that Apple threatened to pull Twitter from its App Store. After multiple delays over the last 15 years, one of Asia's largest slum clusters is set for a facelift. The Adani Group wins the rights to redevelop Dharavi. With a 5,067 crore rupee bid, the Maharashtra government aims to finish the project in the next 17 years. A selfie competition, Hornbill Festival and lighting up of 100 monuments. The government plans a big outreach on the 1st of December when India will officially take over the presidency of the G20. But before all of that, a quick check of the market action today. The Sensex and the Nifty hitting record highs yet again before profit booking wiped out some of the gains in late trade. However, both the indices posting a record close, ending 0.25% in the green. The FMCG pack led from the front today. The index rose over 2% over the day. Mid-caps, however, underperformed, and that index closed 0.5% in the red. So another record-breaking day for our markets. The big story from the aviation space: Singapore Airlines and Tata Sons have decided to merge Air India and Vistara. The move will create a new giant in the Indian aviation industry. Singapore Airlines will get a 25% in the merged entity, for which it will give up its 49% stake in Vistara and also pay the Tatas $250 million in cash. Madhya Mujawar is here with more. Madhya, what are the contours of the deal and how will the combined entity stack up in the Indian market?
This has been the most awaited announcement in the Indian aviation space, and the deal is finally done. Singapore Airlines and Tata Sons have agreed to merge Air India and Vistara, and as part of the transaction, Singapore Airlines will invest $250 million in Air India. It will get 25.1% stake in an enlarged Air India group. The merger is expected to complete by March 2024, subject to regulatory approvals. SIA has also agreed to infuse additional cash if required, which comes to up to $615 million, payable only after the merger is complete. So what does the combined Air India now look like as things stand? Let's look at the market share. In terms of market share, Indigo will continue to be the dominant player. Going by the current numbers, in October, the combined market share of the Tata-owned brands stood at nearly 26%. Indigo, meanwhile, enjoyed a 57.7% market share. So even together, the market share will be half of Indigo's. Next, let's look at the size of the fleets. As things stand, Air India Express, Air Asia India and Vistara together have 200 aircraft. Indigo, meanwhile, has 245 aircraft in the air. Indigo has also been carrying more passengers on its aircraft. From January to September this year, Air India Express, Air Asia India and Vistara together carried 3.4 crore passengers, while Indigo carried 5.3 crore passengers. That's a difference of nearly 2 crore passengers. Let's move to domestic passenger load factor. This metric tells us how much of an airline's passenger carrying capacity is being utilized. Indigo has a PLF of 82.1% individually. Air India, Air Asia India and Vistara enjoy a higher PLF than Indigo, which averages out to 84.1%. Lastly, I checked the on-time performance of these airlines in the domestic market. On this parameter, Tata Group's airlines have taken the top 3 spots in October. This is also the first time Air India has topped the on-time performance ranking in many years, with an OTP of 90.8%. Indigo has slipped to number 4 with 87.5%, behind Vistara and Air Asia India's 89.1%. Now, experts tell me that given how close the operational parameters could be, Indigo will definitely be in for some stiff competition from the synergies of a combination of the 4 Tata brands could generate. And air passengers are definitely in for some interesting times.
Madhya, many thanks for joining us. So this was expected, but finally the deal between Singapore Airlines and Tata Sons is done. The merger between Vistara and Air India should be done by 2024. That's the expectation as per the agreement signed. The question now is, Air India will be the arm that flies internationally, and that's also been explained to us by Campbell Wilson, the CEO of Air India. Remember, Air India is also trying to expand internationally, especially in the US market, where it has been trying to add capacity. And Vistara may very well be the domestic carrier, the full service as well as the low-cost carrier. But of course, these are all plans that will have to be taken through the process of being put in place. But what is official today is the fact that there is now a merger in the works between Vistara and Air India. There is more news from the aviation space, and there appears to be a clear standoff between the lenders and the Jalan Kalrock Consortium, the consortium that won the bid to revive Jet Airways. Sources tell CNBC-TV18 lenders have termed Jalan Kalrock's consortium's claim of meeting all conditions required for the ownership transfer as, and I quote, misleading. Meanwhile, the Jet Airways Cabin Crew Association has moved the NCLT seeking the liquidation of Jet Airways assets after the consortium defaulted on payments committed in the resolution plan. Ritu joins us now with more. Ritu, a stern stance taken by lenders in this matter.
Well, absolutely. A very stern stance taken by the lenders, like you say, and it doesn't look like they're quite willing to hand over the control of the airline to the Jalan Consortium just yet. And, you know, we've been able to access the lenders' response to the Jalan Consortium's claims that they have met all the conditions precedent for the takeover of Jet Airways, and they moved NCLT for it. And now the lenders have replied saying clearly they are not going to hand over control so easily. This response was filed by SBI on behalf of the entire creditors committee, who've sought that this application by the Jalan Kalrock Consortium be dismissed by court because, like you said, it is misleading in nature, and that Jet Airways stakeholders will face grave harm and prejudice if the relief that is sought by Jalan Consortium is granted by the court. Now, the lenders on their part say that this plea by Jalan Consortium is nothing but an attempt to cover up their inability to fulfill the conditions which were laid out in the approved resolution plan. And these conditions precedent include securing international traffic rights, slots, and getting various approvals in place. And lenders have claimed that the Jalan Consortium falsely represented back in May that it had already met all of these conditions to both the Committee of Creditors and to the NCLT as well, whereas the lenders found that they had not. And in fact, even in June, the Committee of Creditors got legal opinion from SGI Tushar Mehta, who also said that the compliance of these conditions was doubtful. And that is the stand that the lenders have maintained. So banks have sought that this plea be dismissed because they are interpreting the conditions in unnatural ways to gain advantages. That is the Jalan Consortium, which was not envisaged in the original plan. So this growing difference between the creditors and the consortium on one hand, and now the latest development front, where the Cabin Crew Association of Jet Airways has also filed a petition seeking the liquidation of the airline, is clearly bad news for Jet. The matter was adjourned today. The next hearing will be on the 6th of December.
All right, Ritu, many thanks for joining us. So Air India and Vistara get ready to take their flight path forward as a combined entity, but Jet Airways continues to face trouble as far as its relaunch is concerned. Outgoing Revenue Secretary Tarun Bajaj is confident that the government will meet the 6.4% fiscal deficit target this year, if not better it. In an exclusive conversation with me, he said that the capital gains tax regime needs to be simplified, but goes on to say that he was disappointed with the response from what he calls conflicting views and interests. Bajaj also believes it's time to completely rethink and reinvent India's personal tax regime, but he did not indicate whether any changes will be forthcoming in the financial year. Listen in.
The government is feeling very confident that we'll meet our fiscal deficit target of 6.4 in spite of very heavy burden on account of food subsidy, fertilizer subsidy, petroleum subsidy also to some extent having come back. But I think the higher revenues and some other measures which the expenditure side would have taken would see us this year to 6.4. Capital gains tax regime is very complicated. It needs simplification. I've said it earlier and I'm repeating it here that we have various buckets under which we put all products. Financial also we put in different products. So I think all this needs cleaning up, but whether the time is right now, the time maybe was yesterday, if I may say so, but whether it happens this year or not is something for us to see on the 1st of February. I would say that we really need to rethink and reinvent the personal income tax regime completely, and maybe come up with something new and maybe have only one regime rather than having two regimes and giving that option. And the aim should not be to increase the tax rates, even if it is revenue neutral or even if it gives up some revenue, if it makes it simple, if there are less exemptions or exemptions are simple, and if you make more money than me, you pay more taxes. If I make less money than you, I pay less taxes, and not vice versa, which is the situation right now.
Well, you can catch my conversation with the outgoing Revenue Secretary Tarun Bajaj at 9:30 p.m. right here on CNBC-TV18. Yunus Yoon reporting there from Beijing. Now, the Cellular Operators Association of India has urged the Telecom Department to impose usage charges on OTT players and apps. The COI has argued the telecom companies are entitled to such payments by OTT platforms as they provide infrastructure that these apps rely on. Ashmit Kumar joins us now with more. Ashmit, you know, this is a really old demand that had played itself out, and it finds its way back into the recommendations that the COI has sent to the government.
Well, that's right. The telecom companies, through their representative body, the COAI, have written a letter to the DOT whereby essentially they're seeking is that the infrastructural costs that these companies have to undertake, that telecom companies have to undertake, must also be borne by OTT in part. Now, what does that exactly mean? What that means is that telecom companies, by way of this letter, are seeking for an arrangement where the OTT players, that's the likes of Netflix, Uber, Zomato, the likes of WhatsApp, they start paying the telecom companies for the data that their respective application uses. The rationale, the argument that has been put forth by the telecom companies in this letter is that, look, they are the ones setting up the infrastructure, and as the company responsible for setting up the infrastructure, they will be well within their rights to seek some form of fair share compensation from these OTT players. Not just that, the letter also cites examples of countries such as France, Italy, Spain, the EU as a whole, also the United States, which are beginning to talk about some form of legislation or a legal framework that will allow for this exchange of transfer or compensation flowing from the OTT players to the telecom companies. So towards that end, what they're seeking essentially is a charge called the usage charge to be levied on these OTT players. That's part one. They're seeking for this charge to be determined between the two sides, OTT players and the telecom companies. And in case there is no settlement between the two sides, in that case, they're seeking for a legal framework that will allow the center to determine what this ideal usage charge could be like. And most importantly, they're seeking for all of this to be incorporated as a part of the upcoming telecom bill. So that's an interesting argument being made here. We're yet to see how the DOT, how the center chooses to respond to this argument coming in from the telecom industry.
Ashmit, many thanks. In fact, staying with that story, India's telecom industry has seen data usage rise more than fivefold in the last 5 years, but the increase in revenue is 40%. What explains this? Rima joins us now with more. Rima.
Data usage by you, me and everyone has seen an unprecedented increase. It's increasing exponentially. Just take a look at this data. The monthly data usage from 2017 to 2021 has roughly gone up by 5.5 times. So one would assume that telecom companies which provide this data and charge for it would be making money. The answer is yes and no. Yes, telecom industry revenues are going up, but it's not going up linearly. In the last 5 years, the telecom industry revenues are up just 40%, while the data volume or the data usage has gone up 550%. The reason for the stark difference is that telecom companies are offering you bundled packs, and many of the popular packs provide 1 to 1.5 GB of data per day. And most of us don't consume that. So assume I was consuming 300 MB of data per day. Even if I increased it 3x, it goes to 900 MB per day. Or even if my data usage goes up 5x to 1.5 GB per day, it still falls within my allowance, which means the telecom company has not made incremental revenue from me, despite my data usage going up so significantly. That explains why in the last 5 years, the data usage or data volumes have gone up 5.5 times, but the data industry revenues have only gone up 40%. So how can industry revenues increase from here on? Operators need to take more price hikes. So the ARPU, and this we're using Bharti Airtel's ARPU as a reference, before Jio was closer to 200 rupees. It fell to a trough of 100 rupees. It practically halved, and only now has it slowly started limping back to pre-Jio levels. This is the latest number, Q2 FY23. And this is on the back of that 40% price hike that we've seen in the last 3 years. But despite that, India's ARPU is still amongst the lowest in the world.
Stephen, many thanks. Now, after multiple delays over the last 15 years, one of Asia's largest slum clusters is set for a facelift. The Adani Group has won the rights to redevelop Dharavi with a 5,067 crore rupee bid. The Maharashtra government aims to finish the project in the next 17 years. Shilpa Ranipeta is here with more. Shilpa.
Well, the redevelopment project of Mumbai's Dharavi, which is one of the largest slum clusters in Asia, has now gone to the Adani Group. Now, there were 3 bidders in total, of which Adani and DLF qualified. The MMRDA commissioner told CNBC-TV18 that the Adani Group had quoted 5,069 crore rupees, while DLF's bid was for about 2,025 crore rupees. Now, the formal process for further approvals will now begin, including approaching the state government and forming a special committee to oversee the project. Now, Adani Group's real estate arm Adani Realty will undertake the redevelopment project that is envisaged as a 20,000 crore rupee project. Now, remember, in October, the Union Railway Minister and Maharashtra's Deputy Chief Minister Devendra Fadnavis had signed a definitive agreement to hand over 47.5 acres of railway land in Dadar for this, and the ministry is set to get 0.21% of the profits. Now, this mega redevelopment project that hasn't seen success in the past 15 years will involve rehabilitation of 49,643 slum dwellers in a cluster that is also known to be a hub for various small industries like the leather and the pottery industries as well. Now, the Maharashtra government aims to complete this project in 17 years and then the rehabilitation in the next 7 years. Back to you.
Shilpa, many thanks for joining us. Now, India is all set to assume the G20 presidency from the 1st of December at a time of great geopolitical and economic uncertainty. Parikshit joins us with what is lined up on the 1st. Parikshit, the big outreach being planned?
India wants to use G20 to promote brand India to the world. That's the message from top officials ahead of 1st December when India assumes the G20 presidency. As the Prime Minister has stated earlier, G20 will be a pan-India event to drive home the message about unity and growth for all. All state governments have been roped in to showcase India's culture and tourism potential. Over 200 meetings will take place across 50 cities, which is the biggest ever scale for any G20 meeting. You will have meetings in Kohima, Hampi, Rann of Kutch and also in Jammu and Kashmir. Every G20 meeting will end with a cultural event organized by the state government. Vasudeva Kutumbakam, or the world is one family, will be a key theme for the Indian government during the year-long presidency. Now, day one of India's G20 presidency will be a special one. It will be a day of massive outreach. External Affairs Minister Subramaniam Jaishankar and the Principal Secretary to the Prime Minister will address a program at the G20 Secretariat that will connect 75 universities across India. There will be an outreach across schools as well. 100 monuments across the country will be lit up. There will be selfie competitions that will be taking place in schools and different cities. The very popular Hornbill Festival will be inaugurated in Kohima, and sand artist Sudarshan Patnaik will draw out the G20 logo in Puri. Among India's priorities, addressing concerns on high inflation and recession, resuscitating sustainable development goals which have taken a back seat, showcasing India's digital infrastructure, lifestyle for environment, stability of food, fuel and fertilizer supply chains, consensus on debt relief will be among the priority areas. Startup 20 is the startup track which will be launched for the first time during India's presidency of the G20.
Many thanks, Parikshit. So watch out for the 1st of December. That is when India takes over the G20 presidency. And of course, as Parikshit was pointing out, there's plenty planned. With that, it is time for us to wrap up this edition of India Business Hour. Thanks very much for watching. Stay tuned. The news continues here on CNBC-TV18.